The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hey, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone, from Las Vegas, Nevada. The Money Show is ending up today, and we'll be heading back to sunny Tucson, Arizona when we're finished here. Yesterday's action did a lot of damage to the bearish position, it seems. It was just the last hour and a half where the market just absolutely exploded to the upside. It was making a absolute perfect 61% retracement at that 1990 area. We were actually in the show watching it, and it backed off, and it just took right off. Now, the first chart that I posted in here to Tiger TV today was a chart of Goldman Sachs. And all I wanted to do here was to just show you that it is a nice Gartley pattern. It's perfect. But the main thing is that we had some really bearish news, supposedly, I guess. I don't know, bullish and bearish, but that's what the commentators were saying. And the stock was down, I think, about $5. And it stopped right at the 61% retracement. Completed a perfect ABCD. And then off to the races it went with, going up $10 a share by the end of the day. That was partly responsible, I believe, for the market turning. The second thing that happened was the market for the IBB opened just with a barely slightly lower low than the previous day, and then proceeded to go a great deal higher. So that's the main thing that we want to be looking at. Now, we are hitting some. Those of you that are fans of Fibonacci, we are going to be hitting some important numbers today, it looks like anyway, from the opening indications. And the first one that we're going to see here is in the Dow E-mini and also in the Dow Jones Industrials. It looks like, excuse me, folks, it looks like we're going to be right up around this 7120 to 7160 level, which is a 61% retracement of the whole move down. And if you remember, we've been talking about the long-term New York Stock Exchange index chart, and that basically tells you that we're still in a downtrend and we're rallying back. But frankly, when it broke that high in the cash index yesterday in the S&P, we haven't done it in the NASDAQ yet, but I'm sure the NASDAQ will do it later. But when it did that, it just basically said that cycle that I was looking at didn't work, and it really should have. That was really a big one, and that means it's just totally wrong. And that could go on to complete what we did with, oh my goodness, I've lost everything off my desktop. Holy moly guacamole. I've only got a couple things left. Oh, this is going to be an interesting show. Anyway, when that broke above that high of February, let's try it again, Larry, of September 17th, that was telling me that cycle had not kicked in, because the New York, or the S&P and the New York Stock Exchange Index had not taken out that high. There were 4 days of divergence when the S&P did. And then, it didn't, and it looked like it was going to be a bearish phenomenon. And then yesterday, in the last hour and a half, things exploded to the upside and negated that. That's basically what you have to do if you're looking at it as a technician. So we'll have to wait and see. Now, on the good side, the Canadian dollar that we talked about yesterday, went down almost to the exact number. It missed by about 10 pips, went a little bit lower, and went down and made the 3 drive to a bottom pattern. If you'll remember, one second, please. If you'll remember, this was the long-term support line that we had broken out last March. Then we rallied all the way up to and that was at 128, and we broke out and we went up to the 134 level. and that made a big three drive to a top pattern in the Canadian dollar. And after that, it broke down, 600 pips. And now we should be getting into a rally mode in the Canadian dollar. That's what it looks like, from it's already rallied about 70 pips off the bottom. So if you were able to do that, we'll see what happens. Now, in the natural gas contract yesterday, or when we were on the show, the natural gas contract took off really strong in the morning, and then later when I came back to check the prices, I noticed that the market had reversed and went back down again. I believe it's right in that zone of where we were looking to buy it. I haven't had a chance to check the prices as of yet, but I will be doing that, very shortly. I did have a few emails, one email, let's put it that way, about the gold market. I believe that 1192 level that we hit yesterday is an important spot to watch gold, because if we get above that, it's gone. I mean, it'll really go, I believe. I think we'll have a correction before that, but we'll have to wait and see. The correction that we got from that level was exactly equal to the last correction that we had, which is right around $17, which is the harmonic number in the gold. So this is another positive aspect of the gold if it's going to turn from here. Silver turned down from a very important number 2, that up around that 1620 level. So that's another one that we want to watch, because if it turns, then you're going to be looking at something, something incredibly bullish if it gets above, those numbers. That's the bottom line. I would like to, give me 1 second, please. The old dryness of the desert is getting me. Hold on here. I wanted to bring out the New York Stock Exchange Index one more time and talk about it. Okay, this is a New York Stock Exchange Index on a daily basis. As you can see, we are going to complete a double top. What am I talking about? It's going to be an ABCD pattern up here at the exact 61% retracement this morning, up at 104.1170. Now, this will determine if we close above 104.1170. This means that we are probably going to go maybe all the way back into the gap area that we left in July on the way down. Nothing is any different than what we've talked in the past as far as an ABCD correction. Remember, folks, the market that you're watching is 531 stocks. It's the 500 S&P stocks, the 30 stocks in the Dow Jones Industrial Average, and then the other stocks that are in the NASDAQ that are also included in the S&P. So you're basically watching 531 stocks do all of this. And, there's 12,000 issues. And here we're looking at, with the New York Stock Exchange Index, which is about 2,400 of those, which are the most active and liquid of the whole group, is, the most important thing to keep in mind. So the thing is, the timing that I was looking at looked really interesting. In fact, that was actually working pretty well until the market went above 21.08 yesterday. And that told us that we were probably going to make new highs above that level, and we did substantially. And we also did it in the S&P cash. The S&P cash also finally took out those 4 days of lunch. It did it in an hour and a half. And remember, I just believe that it's the same thing that we're looking at before. Now, if we look at the breadth index, give me 1 second here, and I'll put this breadth index up so we can see it here. I apologize for my throat, folks. It's just I feel great. I just don't have a voice. That's the bottom line. Okay, when we look here, you'll notice on the far right, we're stopped making new lows since October the 8th. and it hasn't turned up very much yet, but you'll notice that the advanced decline line has really started to perk up. Well, it has to when you have that much power in the market like it had yesterday with the Dow being up. First it was up 50, then 100, then 150, and then 200. I mean, there was just a freight train moving. People were talking about it on the floor of the money show here about how strong, the actual market was. And it certainly, it gave all indications that all systems were go. The close today, I think, will be relatively important because if it closes really strong, it's most probably getting ready to, go make another leg, maybe up to the 786. But, folks, I do not believe, really, really importantly, that we're in a new bull market. I just don't believe that. I just think we're in a bear market, and we're completing it. The $64 question is, how much higher is it going to go? My game plan is, by the way, I was in some shorts yesterday. I was able to get out of those relatively unscathed. That took a small bit, but we had a nice move in gold, and we had a really good move in the Canadian dollar, and crude oil was really a great move yesterday. If you'll notice that what we talked about in the crude oil yesterday was really something. Actually, it was unbelievable. It went 10 pips below the Also, the euro was really good too. That was my really big one, and I forgot that was the best one of them all. But anyway, I think we're going to go a lot lower yet in the euro. So we'll see what happens. But the crude oil went 10 pips below the 786 retracement. It's rallied about $1.50 a barrel. And if we go below that low at 45.40, we will probably make new lows on crude oil below $43 a barrel, probably going somewhere down around $35 a barrel. That's what my original guess would be, and we'll see what's running. We've been one of our good friends here on the Den has reminded us that iron ore futures have rallied 30% since the July bottom, but that should be a normal rally because boy, that market really got hit, and so we are seeing, some of this of what we're looking at. And we'll take a really fresh look over the weekend, but it's amazing how 1.5 hours can change the whole outlook of what you're looking at because the market, the Dow moved it moved 250 points, almost 300 points straight up, and there was just no selling along the way. It was just really amazing. Someone asked me the story. One second, please. I'll be right back after these few words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Service. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and I wanted to talk a little bit about the charts of the Treasury bonds and also the VIX index, because the VIX index is broken badly again. It's taken out the lows of the last couple of days where the market was looked like it was trying to make a top in here, but it in fact it didn't. It just kept on going. Now if you'll give me 1 second here, I'll get that VIX chart up here, and I wanted to show it to you. I mean, most of you know it, and the best way to follow the VIX, of course, is to follow Basil Chapman, because no one does it any better than what he does. So we'll see what's happening. Now, with the stock market up like it is right now, this is an absolute perfect time for the Federal Reserve to raise rates. If they don't raise rates here, there's a black swan out there, folks. That's the way I look at it. This is a perfect scenario for them to do it. But they've been worried about it, and now if they put it out now, probably will make the market rally, would be my guess, because it's certainly in a rally mode. But we'll watch it very, very closely. But we have virtually no fear in the market now. We're breaking a record, I think. Oh, no, we didn't. We got down. We matched the record of 9 days in a row down in the VIX. Then we rallied for 3 days, and then yesterday we took out the low of the previous move. Now, I did mention about the S&P 500 cash. We have not taken the high out of September the 17th as of yet. We will do that this morning because it's very, very close. We took out the highs of the last day or two, the last 4 days where we had that resistance and divergence up there, but we haven't done that yet. But it should do that early this morning, I would think, without too much of a problem. So just keep that in mind, and we'll look at that as we go. We will be watching the Treasury bonds very closely because this one was the Treasury bond market really surprised me, because when I came back to check the prices at the end of the day, I would have assumed that the bonds would have closed, somewhere down in the mid 158 level. But in fact, the Treasury bonds, they didn't back off at all. The fact is, when the market was rallying, the bonds were rallying. The bonds had made a 50% retracement off of the high that was exactly at the 786, and you'll see that the market, once it made that 50% retracement, it rallied 1 full point, and we're actually holding up really good today. So even though the Dow rallied 250 points, you think that would have been a big sell-off in bonds because of a risk-off situation, and then you can see that really didn't happen. So there was some anomalies yesterday in the market. Now, I've been asked to talk about the euro. We were watching the euro yesterday at that very important level of 135. We got to 134.89. That took out the high of the last 2 months by I think 8 pips. It stayed there for well over an hour, and when markets break into new high ground like that and there's no new buying, that's an ideal time to take a look on the short side. And at that time, the euro was up quite a bit in the overnight market. And the other thing that occurred is that it was setting exactly at the 61% retracement of the long-term downtrend where we had started way back on when the euro hit 117. Now, we've broken well over 170 pips from that high, which in 2 days is a great deal of movement in the dollar versus the euro, and that tells us that we're most probably getting ready to go lower. It won't go straight down, of course, but we'll wait and see. That's the main thing to to keep an eye on when you're watching that euro. But there's major resistance up there, the high we made yesterday. If we get above that, then it's like the stock market. It will just literally propel itself higher is what it looks like. But right now, that's what we're watching. Someone's asked to repeat the gold and silver. We hit that number, a perfect ABCD at 1191 yesterday. We backed off $17 overnight, got down to, I believe, 70. I think about 73 or 74, and we're trading around, I think, around 1180 or something right now. So nothing's really happening, with that as of yet, but it should be pretty interesting. We're going to have a pretty strong opening, it looks like, this morning. We've got gold trading at 1182, silver at 1609. It's still in 10 cents away from the high, so it could certainly turn around and go higher if it decides to do that. But we're going to have one of those bright and shiny openings this morning, and we'll see what happens. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Break. Okay, folks, we're back. I'm having a little bit of a technical problem due to the internet, but we'll hopefully get that taken care of. Now, I wanted to we'll talk a little bit more about crude oil. We did hit the beautiful 786. I call it beautiful because it certainly was. But the crude oil hit the 45.50 area. We went down to 45.35 yesterday. Then it turned. That was happening at the same time the stock market was moving, and we'll see if that's going to be the case. And but the problem is that some of the others, the heating oil and gasoline, have been down, but they're finally starting to turn and get moved up a little bit. Now we have some statistics here in the market. We're going to be up for 3 weeks in a row, and usually that will mean a correction, whether it's a short-term or long-term correction or not. I'm not really sure. Frankly, folks, I was really a really strong believer that we had made a top up here at that 112. 20 200 level in the S&P. That was equivalent to about I think 17,000 and change in the Dow Jones. So I want to see how the market reacts today to all of this, and we'll have to wait and see. And I don't think, I'm not even sure whether I'm even being heard. May I make a voice check here at TFNN? Can you folks hear me? Because I'm not even sure I'm coming through. I've lost data. Good. Thank you very much. I'm just not getting any data, so it's pretty hard to post any charts or not. So thank you for that. And it just came back up again. So we'll see what's happening here. The other thing that I watched this morning, last night. I'm not a late night person here, and I used to come to Vegas all the time when I was at Drexel, and gee, I haven't been here in 7 years. That's since I talked. I was the senior speaker here yesterday. Fortunately, my experience has held up, and I've lived long enough to be the senior speaker, so it was kind of funny to listen to that. But we did meet some old friends, which was really nice, and we're winding it up today, and then we're heading back to the next stop. We'll be home, where we'll be for a while. Okay, I would like to talk a little bit about that cash S&P index, because we did take out that September high this morning on the opening. If we close really badly today and the Dow Jones makes that exact 61% retracement, which is just a little bit higher, so the Dow's got to get up about 40 today, I believe, to make that, and it's not too far away. But with the VIX coming down like it is, and the market, hitting some of these numbers, we're going to get a retracement here, folks. So I wouldn't recommend buying anything at this level. We are still, if you just looked at the New York Stock Exchange Index, it's really, really hard to be buying up in here. That's the main thing. But you've got the VIX making another new low today, which is acceptable because it's certainly been in a downtrend. There is absolutely no fear in the market at all, none. I mean, they've got this thing that it's all systems are go and let her rip, and maybe that's the case. And we'll see. I could see that the bottom that came in on August 24th was an important bottom, because it was a 1.27 of the October low of last year on the New York Stock Exchange Index, and now we're making that ABCD pattern, and that's what I'm looking at. Even though they're telling you that the Nasdaq is leading, that is not the case. The Dow Jones Industrial is leading. Those 30 stocks are the ones that are leading. The Dow is far, far stronger than the New York Stock Exchange Index. Yesterday, the Nasdaq was really strong, but not nearly as strong as what the Dow has been over the past several weeks. So we want to remind ourselves that yes, these things can certainly happen, but you don't want to be in front of it and wait and see. So that's what my game plan is, to wait till either late today or early Monday, because my game plan would be to see the market make another high in here and then back off a little bit. And the first little Gartley that I see on a 30-minute chart, I'll be looking to to look at the short side of the S&P one more time. I've lost data again. I hope the folks can hear me, because I certainly can't. I can't see whether I'm getting any data or not. Yes, I guess I'm okay here, so we're not going to worry too much about it. All righty, we got we had a question about Apple. Apple had a pretty good run, I guess, in the market yesterday, and looks like it wants to go higher also. So basically, folks, this is a Friday in an up week out of 3 up weeks. It's almost impossible for this market to close really badly today. It can close down on the day, but I don't see how it could possibly be it wouldn't be, it just wouldn't happen. Now, remember that we have a big 786 retracement in the S&P up at 2040, and we've already been to 2026 already, so, 2025, so that's only 15 points away, so that's not out of the question for today, because with a Friday in an up week, and, with the breadth increasing like it is, it could easily get there. This has happened before. It happened in 2000 when we had the big break and market rallied back. In 2007, the market also rallied back, and we're doing the same thing this time. It's just that it's looking like it wants to go a little bit higher. Anyway, we'll just see if we'll just see what happens with this thing, and we'll go from there. We could probably move down, but basically the game plan is, folks, you can't fight the tape. These puppies are acting really strong. You just can't fade that. Wait till you get a spot where you can put a low risk trade on. I thought I had the low risk trade on. I mean, I had it perfectly, I thought, and I end up losing. I think I lost 60 cents in the Nasdaq ETF, and I lost even less than that in the SDS. So those are the things that you have to do, because it breaks these support points and these numbers that we look at. It's really difficult to stand in front of it. That's just no way. So just wait and see what happens. I want to see how the numbers line up at the end of the day, where the things hit, what the patterns look like, and then I'll get a better chance. Much like, when I was watching gold, I really thought gold had a chance to make that 1190 area. And I got out of my long gold at 1173. I missed that last 18 bucks on the upside, but fortunately I got some of it on the downside. And right now I'm basically flat gold, and I'm waiting to see what happens in the next wave. I do not like being long on a D point of an ABCD swing, folks. We have that happening in gold, and we have that happening in the New York Stock Exchange Index. We have that happening in the S&P, and also in the Dow at the 61% retracement. I'm going to check here. Just give me 1 second here. I want to quickly look, because my data's back up. I want to double check the Dow Jones and see if we have made that 61% retracement. Yes, we did. We hit it at the Dow. The 61% retracement in the Dow was 17,183. That is a higher high than we made way back on the on October, just a couple of days ago. And it's far higher, but we've made the 61% retracement in the Dow at 17,183. We're now 30 points below that, from where it hit. So we'll watch to see what happens, because if something happened that the market would close lower today, that this might be just a breakout failure, much like what happened in with crude oil. Remember when crude oil broke above $50 a barrel and went to 50.85, the whole world was talking about the big breakup, and what did it do? It dropped 12% in a matter of hours. So keep in mind that these things can move around, quite a bit. We now have the Nasdaq down on the day a little bit. The S&P is pretty much unchanged, and the Dow is still up on the day, but just marginally. But we did hit that 61% retracement of the whole move down in the Dow Jones Industrial Average. Whether that is going to be the top or not remains to be seen, but we have to keep an eye on it. That's the way I look at it here in the cheap seats in Las Vegas, Nevada. Folks, I could not believe, I haven't been to Vegas in 7 years, and I could not believe what has happened. I mean, it is absolutely a zoo. I don't understand how these gambling stocks like Wynn and the Sands and other places have gotten hit so hard, because there's people everywhere. You have to wait for a taxi. The meals are unbelievable. They even tack on in room service. They give you a thing they call a hotel charge. It's not the tip for the waiter. It's just an extra $8 for a hotel charge to deliver bottled water to your room. I don't mind paying it, but my gosh, I mean, you got to draw the line somewhere. Anyway, it's in order to get a good steak in this town, you've got to pay. It's about $100 between the steak and a salad and the vegetable and a glass of wine. It's going to cost you $100. So this is a lot different than Clearwater, Florida, and Tucson, Arizona, for sure. But it's different. It's a great party environment if that's what you like. I used to like it when I was a lot younger. I never did much gambling other than playing some poker, but they certainly have a real handle on how to make people spend their money here. That's the bottom line of what we're watching. So let's just keep an eye on some of these things. The market sold off here a tiny bit, but that's nothing more than the early morning enthusiasm of the whole thing. Now, the crude oil has made a 38% retracement of the move down. We went up to that 47.50 level. That was 38% of the high that we made way back at 50.85. So we've rallied well over $2 a barrel in crude here in the last few hours. Well, that's been only a few hours because it made its bottom yesterday mid-morning. So it's hanging okay there. Regarding the euro, the first objective on the euro has certainly been met already because it's dropped well over 150 points off the bottom. There should be some really strong resistance in the euro now if we get back to that 114 level. We're trading at, well, it's actually 114.20 level, but somewhere around 114 and a quarter, about 70 pips from where we are right now, would be a spot where the euro would most probably have a pretty good resistance coming in at that point. But remember, if we get above that 115 level anymore, then you're really looking at something that could be incredibly bearish, and you just or bullish to the euro, bearish to the dollar. That's what I'm seeing anyway. We'll have to wait and see. Someone asked about the position in the gold, whether I would. We're trading at 1183 right now. What we're doing now is making nothing more than a 61% retracement back of the rally from yesterday. That came in at 1185, and if we get above that, anything around 1200, boy, gold, and it'll pull silver along too. We could have a big move there. I still, long term, I'm very, very bullish gold and silver. I think we made a major bottom down there. It's proved itself. We've rallied over $100 an ounce from the bottom. Actually 120 because we got down to 1,070. And now the next pullback will be the one that we want to watch. So far, the corrections in gold have all been around $17. The one last night, we went from 91 down to 74. So that one was $17. Also, that happens to be the harmonic number in gold. That's the number that it seems to respond to quite a bit, $17 and $34 an ounce. That's what we're looking at. Someone has asked a question. It wasn't Priceline Charlie, but they asked a question about Priceline. But unfortunately, I am not getting any data this morning, so I have nothing to say about that, which for me to have nothing to say is quite unusual. So the first half hour of trading is almost in now. We've got just about everything's unchanged. There's not much happening right now. The Dow Jones in transportations still hasn't confirmed this bullish move to the upside, and we've made a 786 retracement in the other thing. Now, something very significant just happened, folks. The New York Stock Exchange Index has just posted, and my data is very, very late. So we posted a price here, the New York Stock Exchange Index at 10,414. A number we were looking at was 10,411. So we opened right at that 61% retracement of the whole move down from May to the 21st of August. A 61% retracement back in the New York Stock Exchange Index. That's where it opened right now. So that's why the close is going to be so important today, because if we close, strongly above it, you could extend, much higher, and we could make that 2040 level, in the S&P 500 without doing, very much at all. But folks, this is bearish. I don't care what they try to tell you with those 531 stocks, what they're doing. The patterns in these darn things, even though they look like they're breaking out, I'm a non-believer when I look at that New York Stock Exchange Index and the S&P and the NASDAQ, because the NASDAQ is, it's lagging. It's not even taken out the long-term 786 out of this yet. It might, but hasn't done it yet. So we'll see. All right, we'll be back to wrap up the show in just a few minutes. 877-927-6648.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3x Bull and Bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and I got a message that we're going to have Tommy O'Brien and his son, Tom O'Brien and Tommy Jr. are going to be on the show here in the Binary Options Hour from Las Vegas, so be sure to listen in. I'm sure they'll have some good information about what's been happening at the show. We've had a question about the stock of Google. Google is up 8 days in a row now from that 625 level. It has a expansion number, a 1.618 expansion number at 666, which is the old mystical number, and whether that's what it's looking at. There could be making a double top there, but the ABCD pattern says we could easily make a double top up here at the 680 level in the main thing. When we backed off into September, Google stopped right at the 61% retracement at 590. So That's the main thing. I'm not able to post the Google chart, folks, because I'm not getting data. So what I'm doing is I'm watching the screen here on CNBC, and I happen to see Google come across. I know what the chart looks like because I've watched it, but I'm unable to post the chart because of the data problem. Okay. We are just now trading. The New York Stock Exchange Index is trading at 10,411. That's the Fibonacci retracement off of the whole move. So keep an eye on that. That's going to be interesting. If it doesn't get above that, that completes that ABCD at the 61% retracement. And H.M. Gartley on his book, Profits in the Stock Market, said that there is no better trade than to sell an ABCD correction in a bear market or to buy an ABCD correction in a bull market. So we shall see what we shall see. Now the other 531 stocks are sure putting in a big a big performance here. But let's see what happens today, and then we'll look at these numbers over the weekend and get us a pretty good idea of what we're watching when we're seeing some of these things. The overall commodity markets have had some pretty good rallies, so we're going to see if some of these continue. I noticed that the market for coal is still going down quite a bit, but the other iron ore has had a good rally. Anyway, that's it, folks. Live every day in an attitude of gratitude and do something kind for someone who has less than you, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.